This is our Forex blog video for August 23rd, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We use our currency meter to sort these from strongest to weak. The Swiss and Euro, which are tied together, are the strongest. Then the Yen, the Dollar, the Pound, New Zealand CAD, and the Australian are on the weaker side. So you want to buy the Euro CAD, the Euro Australian, and at other times of the day, there might have been other trades. So the first step of our three-step Forex trading system is when you have a weak Australian, and when it's weak on all time frames, real-time trend, 15, hourly, daily, weekly, monthly trend, all down, you obviously want to sell the Australian versus one that's strong, like the Euro. Now, this is not a currency we leave running, so I don't have any of our live stats on here, but you don't really need them. One of our tools shows you the value areas. This is where most traders have positions for the previous 4 hours. And as long as you're above the value area, you're basically looking for buys. Underneath the value area, looking for sells. Starting the day off, we're above the previous 4-hour value area. This is the price that most traders have positions during the previous 4 hours. And as you can see, during each 4-hour block, the price is above the previous 4 hours value area. So you're just looking for buys, 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 buys. And you can see it pretty much went up 103 pips. You only need 10 pips a day to double your account every 2 months. So, catching 30 pips here, 20 here, 40 here, I'm just guessing. I'm not looking at the price. 20 here, 20 here, 10, 15 here. Every one of those hits your minimum goals. The CAD was also weak on all time frames. So, I'm just trying to showcase some of the easiest ways of trading. Euro CAD very likely looks very similar. It has to download tick data to calculate these. And when you know where traders have their positions, you also know when they're wrong and losing money. So that's why we use this. Underneath the value areas, it's down. Once it broke above there, up, up. In some cases, price is just going sideways and it opens underneath the value area. It really has to open and then break the lows before you really can take it on the short side. And right here, when it breaks up, you go long, it finds support, you go long, and you go long, and it just absolutely took off and went 50 pips. And this is one of the reasons why we use our currency meter. Now, there were times today, like right here, 10:30, that the dollar was weak, the euro was strong. Both of them are strong and weak on all time frames, except the hourly trend was up due to about 4 or 5 hours of dollar strength today. One of the things I'm also working on is just simple colored bars that show you the statistical strength or weakness of the currency. Here is a 5 pips per bar euro dollar chart, and you can see when the bars, when it crosses the moving average, which is a digital signal processing base 1, it's a very fast moving average that has shifted 2 bars to the right, and you can see it just absolutely took off earlier in the day. It went sideways and broke out. The bars get really dark green, which means there's a lot of intensity. And you can see, during pullbacks, you have a small win right here, small win, 20 pip win or so, actually 15 pip win. That's what I consider to be a relatively easy way of trading. Another way of trading is using our new FX daily and weekly value areas. These will show you where most traders have positions for the previous day and the previous week. Underneath the yellow line, this is where traders have the most positions yesterday in the Australian yen. You're looking for sells. Above that area, you're looking for buys. This is the previous week's value area. This is where most traders have positions for the last entire week. So obviously this one opened up in a downtrend. It was underneath or at the previous week's value area and the previous days, and you can see it went down. The real-time trend got relatively strong, and it worked its way up here. Once the bars go red, it's underneath the value area. You get short. You can see it pull back about 30 pips right here. You get a little bit of a pullback. And there's a lot of ways to trade the pullbacks. You can just simply visualize or draw a trend line underneath there, or use the very fast displaced moving average, which we use our new digital signal processing based technology. It's ridiculously fast moving average. I use the 5 period, shift to 2 to the right, and I make it thick so you can see it. So you can see when you get a close, or a red bar that closes underneath there, you're short right here with your stop right above the high. You made maybe 15 pips there. And a lot of times once it's made a move like this, it's going to pull back 15 to 25, sometimes 30 pips. If it doesn't, you're usually best off not taking the first trade. But if it tries to go higher twice and it can't, and especially if it hits a resistance area like the previous week's value area low, this is where basically 68% of last week's trading activity happened, between 83 up here and 82.47. This is a very significant level to be broken. And you can see once the support area gets broken, look, it acted as support. Once that area gets broken, it acts as a resistance, and then the market's off to the races. You know, and sometimes they fall immediately, and you know, as you can see in this case, it kind of fell and went sideways. There's two main ways that we enter trades. One is a pullback trade, and this barely even counts because I like them to be, like I said, 15 to 25 pips. And another trade is kind of a multi-hour rectangle pattern. So in this one, kind of went up and down. Anytime it tests the top and bottom twice, so top, bottom, at that point you can buy or sell the breakout of that. Obviously the trend is down because we're underneath last week's value area low, last week's average price, and today's or previous day's average price, and you can see it just took off. Usually it's going to work its way to the fib target, so you can just draw this on there and kind of wait till it gets down there. I probably would have got out of this trade here at 11, would have been short somewhere around 30. Nice 20 pip win on that one. You might have made 6 or 10 pips earlier. This one, earlier on, you could have got into this trade right at the beginning of the whole trend to the downside. And that's basically, in a nutshell, that was the Australian yen. Let's take a look at it with the 4-hour value area lines. So you can see it started the day off above the value area. So having the intraday value areas up, you might have avoided the sells earlier. And notice when it was underneath this area, if you had sold right here, you would have lost. But if you flipped and went long, it went up 20 pips. You got your loss back. Bringing the other chart back up. Notice how when that area got broken, the bars were green, and it kept you green all the way to the top. And notice how the bars, got light green here before it broke down underneath the displaced moving average. You would have been out somewhere at 70. You might have gone long here at 53 and made 17 pips on that one. So there's a lot of different ways to trade using our tools. I think our 3-step easy trading system's the easiest way, and that is step 1, use a currency meter. Strong Swiss, strong euro. Again, the dollar was weak here around 10, so you could sell the dollar Swiss. So let's bring that chart up here. I'm going to first bring up the intraday one. And remember, this shows you the 4-hour average price for the previous period, which is, this is just a 5-minute chart. It works on any time frame. It has to download tick data to calculate this. And so this one also started underneath the value area. If it found resistance here and came down, you would have been selling. It went sideways here and broke out, so you probably would have bought that. If you went short right here, you would have had a loss. You had to get out and go long again. When this breaks the value area right here, you go short. You can see at 77, went all the way down to 50. And then during the next period, it opens up. Most of the activity is right here near the lows, so it opens up above that area and breaks out. You might have went long right here. It pulls back, finds support here. You might have went long right here and made money. During the next hour, usually I let it kind of chop around a little bit to see where it's going to go. At least a few bars. When it breaks down right here, you can see it fell 10 pips. And this is a currency that doesn't really move that many pips per day. It's probably about a 60 pips per day range. So I tend to avoid this currency myself. However, it is a relatively good way of trading when you can catch moves that are likely to be big. When this breaks the value area right here, it fell 30 pips, which is more than enough to get back your losses. Another tool I'm about to release shows you each currency and how many pips it's above the daily value area or the weekly. So the euro dollar is above yesterday's average price by 98 pips, and it's above last week's average price by 209 pips. The pound's also very strong, the New Zealand as well. So knowing that a currency is above the previous days and or the previous weeks, if you're starting the week off, you want to look at the previous weeks. Let's look at the New Zealand dollar, which we hadn't looked at earlier. This one's obviously pulling back right now, but it's still above yesterday's value area. If you wanted to focus on just buying this today, you had a small win right here, small win, and once it's underneath the value area, you're not buying. So you're no longer buying this one once it's underneath the value area. The euro dollar, you already saw that. This one was above yesterday's average price and last week's average price. So you look for buys, you would have a loss here, a 20 pip win here. It's underneath the value area, so you're not buying. You would have made money on this, maybe lost 10 pips, and then caught a 35 pip win. So by just being out of currencies that don't meet all those criteria, above the 4-hour value area, above the previous day's value area, point of control, which is the yellow line, and above the previous weeks. So let's look at some of them that are pretty weak, like the dollar Swiss, right? It's underneath yesterday's value area. It's underneath last week's value area. So every time it breaks here, look, you would have had a loss, you would have won. It's above the value area here, so you're not looking for sells. You have a sell here, probably lost money on that. Shorted again here at 69, went all the way down to 40. So again, by just avoiding currencies that are not likely to go your way, when basically you're trading in the direction that the biggest traders in the world are in, you can catch very high probability trades. And this is a very simple way that I've been trading the last few days and just absolutely loving it because it's just easy. There's nothing to think about. Most of the trades work. And when they don't, you have a small 5 or 10 pip loss. And when they do work, even on a currency like the dollar Swiss, which typically I don't trade, still found a really nice big win right here. So that's another way of trading, very easy. And hopefully we should have this released tomorrow afternoon is what I'm expecting.